Bitcoin's price has fallen as a result of a widespread crash in the cryptocurrency market. Or to be more precise, Bitcoin's crash triggered a crypto winter. Other coins, known as altcoins, tend to follow Bitcoin's lead in terms of price fluctuations. But why has Bitcoin fallen? Bitcoin has fallen roughly 40% since its all-time high as of June 2022. The crash occurred after an overall bear market that affected stocks and was caused by a number of factors. Fears in the consumer market have been fueled by high inflation rates caused by the government printing and distributing money during the pandemic. At the same time, the Russia-Ukraine conflict drove up fuel prices, adding to the country's inflationary pressures. A number of other factors, including supply chain issues stemming from the pandemic, also contributed to record high inflation from late 2021 through spring 2022. As a result, the Federal Reserve voted to raise interest rates rapidly. This raises the cost of borrowing money for businesses, raises bond yields, and as a result, lowers stock returns. Recently, cryptocurrencies have been tracking the stock market. However, the stock market, rising interest rates, and inflation have not been the only factors influencing Bitcoin recently. On top of that, the cryptocurrency market is extremely volatile with large swings and the potential for large gains and losses. Many experts attribute the current crypto crash to a stablecoin, a cryptocurrency that is supposed to be directly linked to the US dollar and thus lose its value. The crash of Terra USD sent shockwaves through the cryptocurrency investment community, undermining trust in cryptocurrency as an investment. According to experts, this fact alone distinguishes this crypto winter from previous crypto crashes. The Celsius Network, a crypto lending company based in the United States, then froze withdrawals and transfers due to volatile market conditions. Following the event, Bitcoin fell to less than $23,500. The Celsius Network was not the only company in the cryptocurrency industry to be impacted. Coinbase, a major exchange, laid off 18% of its workforce, and other companies announced layoffs and hiring freezes as well. All of this news has caused serious concern among investors, resulting in additional sell-offs and dips. However, investors are aware that all markets experience ups and downs. Is this crypto winter unique? Will Bitcoin make a comeback? When you compare the long, turbulent history of the stock market to the history of cryptocurrency, it should be safe to say that investments will eventually rise again. In a guest op-ed for Being Crypto, Diego Vera of Buddha.com shared the headline, "Don't panic, we've been through this before." He demonstrated that markets trend up over time by tracing the history of previous economic crashes and recoveries from individual stocks to indices such as the Dow Jones and Nasdaq Composite. And as for Bitcoin specifically, he pointed out Bitcoin has gone through multiple cycles in the past and has always bounced back with a vengeance. In fact, he said 100% of people who bought and held for 4 years or longer saw a positive return on their investment. When should you buy Bitcoin now? Obviously, the best way to maximize the return on any investment is to buy low and sell high. If you bought Bitcoin in 2011 when it was around $10 per coin, you'd be in good shape right now. If, on the other hand, you invested when Bitcoin was nearing record highs, or even when it surpassed the $50,000 or $60,000 mark, you're probably sweating a little right now. Although Bitcoin has seen a slight increase in recent weeks, it's still a long way from its all-time high. You still have time if you want to buy the dip. Creating an investment plan and using dollar cost averaging is one way to reduce risk without trying to time the market. Divide your total investment over time and buy at regular intervals as the price of Bitcoin falls. Even if it continues to rise, you should stick to your investment strategy. The crypto winter may be coming to an end. If you buy Bitcoin now for more than $20,000 and it reaches its previous highs, you will have received a return on investment of more than 300%. Of course, cryptocurrency is a highly volatile investment and there is no guarantee that it will recover, let alone reach previous heights. Do not invest more than you can afford to lose, and be aware that investing now and waiting for Bitcoin to recover may be stressful. Investing in a bear market necessitates patience and the ability to park your investments and forget about them for an extended period of time, possibly years. If you're looking for a short-term investment, Bitcoin is probably not the way to go right now. Despite recent gains, analysts are waiting to see if Bitcoin will again fall below $20,000, which Next Advisor refers to as a key price point. Martin Heisboek, head of the blockchain and crypto research at Uphold, told Next Advisor, "The market remains vulnerable and on edge, not necessarily by threats from more crypto projects going bust, but from the difficult economic situation we are facing right now." According to Changelly.com, Bitcoin could reach more than $38,000 by fall 2022 and as high as $40,000 by the end of next year. It may surpass previous highs in 2023. Experts agree that Bitcoin will recover, but there is always a risk involved. If you want to buy a Bitcoin dip, now could be the time. However, it is critical to ensure that you are not simply jumping on the bandwagon and that crypto is part of a diversified portfolio. The bear market and crypto winter are creating numerous opportunities for investors with a high risk tolerance, but it is critical to invest with caution. If you're thinking about investing in cryptocurrency, Bitcoin, the coin with the highest market cap, might be your best bet.